Have you ever wondered how banks, the same ones that keep your hard-earned money safe, actually make money from you? You deposit your money thinking it's resting peacefully in your savings account. But behind the scenes, your money is working harder for the bank than it is for you. Today, we're going to open that vault and uncover how banks truly make money from you, step by step, layer by layer. Welcome to the Life Lab, where we decode the hidden truths of money, psychology, and life. Let's begin. When you think of banks, you probably imagine safety, convenience, and maybe a few perks like debit cards or net banking. But banks are not charity institutions. Their entire business model is built around one thing: profit. And that profit often comes directly from the way you use, save, or borrow money. Let's break it down into the main ways banks make money from you. 1. The interest rate game: your money, their profit. This is the oldest and most fundamental way banks make money. When you deposit money in your savings account, the bank pays you a small interest, say 3% or 4% per year. But the same bank lend your money to someone else in the form of a loan at 10%, 12%, or even 15%. You see what's happening? The difference between what they pay you and what they earn from borrowers is called the net interest margin. That small percentage difference multiplied across millions of customers and billions of rupees turns into massive profits. You may think your money is sitting in your account, but in reality, it's being loaned, rotated, and reinvested hundreds of times. You get crumbs. They get the feast. 2. Fees and charges, the invisible drain. Now let's talk about the sneaky way banks make money through fees and charges. Every time you swipe your card abroad, withdraw money after your free limit, delay a credit card payment, or even maintain a low balance, banks earn money. These are called non-interest incomes. They're like hidden toll booths on the road to your financial freedom. For example, an average person might pay 2,000 rupee to 5,000 rupees a year just in unnecessary fees, ATM charges, SMS alerts, minimum balance penalties, card renewals, and so on. And the best part for banks? These fees are almost pure profit. There's no product or cost involved. Just a fine-tuned system that quietly extracts money bit by bit without you even realizing it. 3. Credit cards, the psychological trap. Credit cards, the glittering weapon of modern banking. You feel powerful when you swipe them. But behind that shiny plastic lies one of the biggest profit machines banks ever created. Here's how it works. When you use a credit card, the bank earns a small commission from the merchant for every transaction. That's good business. But the real money starts flowing when you miss your payment or pay only the minimum amount due. That's when interest rates skyrocket, often 30% to 40% per year. Add to that late fees, GST, and compounding charges, and the amount can spiral out of control. In short, credit cards are less about helping you buy now and more about locking you into a cycle of paying forever. The bank profits not when you pay in full, but when you delay just enough. 4. Loans, the art of debt creation. Loans are banks' favorite product because they turn you into a predictable source of long-term income. Whether it's a home loan, car loan, or personal loan, banks make money from the interest you pay over the years. But here's the trick. They don't just lend you money. They design loans in such a way that you end up paying much more than you borrowed. For example, a 50 lakh rupees home loan at 8% for 20 years means you pay back over 1 crore rupees. That's double the original amount. And why you think you're building an asset? The bank knows it's quietly building its profit. 5. Investments and mutual funds, earning from your trust. In recent years, banks have also become financial supermarkets. They sell mutual funds, insurance policies, and investment plans. Every time you buy one, the bank earns a commission. Many people think the advice from their relationship manager is unbiased. But in most cases, the bank is pushing the product that gives them the highest commission, not necessarily the one that benefits you the most. That's how trust is monetized. They build a relationship, then earn from it year after year. 6. Forex and international transfers, the hidden spread. Whenever you send or receive money abroad, or even when you swipe your card in another country, banks make a silent profit called the forex spread. They give you a slightly lower exchange rate than the market rate and pocket the difference. Let's say the real rate is 83 rupee per dollar. The bank gives you 81.5 rupees and keeps 1.5 rupees per dollar as profit. Multiply that by thousands of transactions daily, and you'll see how much they silently earn. 7. Data and analytics, the new gold mine. In the digital age, data is money. Banks track your spending patterns, your shopping habits, your EMIs, and your lifestyle. They use this data to offer you targeted loans, credit cards, or products when you're most likely to say yes. This psychological timing makes their marketing extremely powerful. And in some cases, they even sell anonymous data insights to financial institutions. Your data becomes their hidden asset. 8. The power of float, earning while you sleep. When you deposit money or pay through UPI, there's always a small delay before the transaction settles completely. During that time, sometimes just hours or a day, the bank uses that money in short-term investments to earn additional returns. This is called the float. You don't lose anything directly, but the bank gains from every microsecond your money is technically with them. It's like earning rent on money that isn't even theirs. 9. Psychological engineering, making you feel safe to spend. Banks also earn from your psychology. They spend millions designing apps, notifications, and reward systems that make you feel good when you spend or borrow. Cashback, points, and rewards are not gifts. They are psychological nudges to make you use your card more, take bigger loans, and deposit more. They create the illusion of empowerment while quietly tightening your financial leash. What you can learn from this? So now that you know how banks make money from you, the question is, how can you flip the game? Start by becoming financially conscious. Don't keep large idle balances in savings accounts. Invest wisely. Pay your credit cards in full every month. Avoid unnecessary loans. Track every hidden fee. And most importantly, understand that banks are designed to profit from your behavior. So make your behavior work for you. Banks are not villains, but they are businesses. The more aware you are, the more you can use them smartly rather than being used by them. And if you found this breakdown eye-opening, make sure you subscribe to the Life Lab, where we uncover the hidden systems that run money, mind, and life. Like, share, and comment on what topic you'd like next. Remember, knowledge is the best investment, and it pays the highest interest. This is the Life Lab, signing off, where life meets logic and learning never stops.